Mac and cheese has a new home. Perhaps it's not the bowl in your kitchen. It is the Nasdaq. Welcome to Mean Street. It's Friday. I'm Dennis Berman of the Wall Street Journal. Some very interesting news this morning about Kraft, the consumer products company you know. For a long time, it's traded on the New York Stock Exchange, but it took the unconventional step, perhaps for unconventional reasons, to move to the Nasdaq exchange this morning. Paul Ziobro, Dow Jones Newswires, is here to tell us about the switch.
Yeah, so as you all know, Kraft is going through this big split up this year. By the end of the year, it's going to be splitting up into a snacks company called Mondelez,
right,
which is a brand new name.
Terrible name.
That's made up.
Let's just establish that early.
It's a made up name using made up words to make up the name.
Right.
So it's going to be Mondelez and as a snacks company with Oreo, Trident, those sorts of things. And then its packaged foods business is going to be called Kraft as well.
Well, they didn't screw that one up.
Yeah.
Okay, so Kraft.
Screw that one up.
So Kraft, the remaining company, is moving to the Nasdaq.
Yeah.
And why?
It's moving to the Nasdaq, and there's two main reasons that we hear from Kraft. One is costs. It's actually going to be saving some money by listing on the Nasdaq versus the New York Stock Exchange. And the other is what they're calling is better visibility and marketing plans. I mean, you know, what Nasdaq is doing is offering these sorts of packages where they can just give these companies greater visibility. And two things that the Kraft that I've heard is, you know, Nasdaq has this pretty nifty building in the heart of Times Square.
That's right.
Where you can just see, you know, the company names, the tickers that are listed on there, and especially for Kraft, I mean, they're coming up with 2 new corporate brands. I mean, one new corporate brand, and so it's going to give it a lot better visibility.
So basically, what this is all about is a billboard.
Kind of.
Which kind of sounds...
Part of it is about a billboard.
It sounds a bit pathetic, though, Paul. It basically says how little differentiation, true differentiation, is in the core product of a stock listing. So there it is. We see, I guess Dillard's had an event or something there at the Nasdaq when those photos were taken. But I don't get it. Like, why make the switch? I mean, is a billboard?
I mean, that's what they're saying, is that they're using this opportunity of the split up to kind of reevaluate where they're listed. And so, yeah, one reason is the visibility. The other reason is cost. I mean, the other things you think about is execution technology. I mean, how different could that be?
Well, as we saw on Facebook, apparently it was different.
Right,
Nasdaq isn't broiled in quite a problem.
Yeah,
there.
so I mean, when you're looking from Nasdaq's perspective, it's a pretty good get, considering what happened with Facebook and how big a snafu that was and the fallout from it. It's nice that they get this nice, big, you know, staple name. I mean, it's not nearly the same as Facebook, so maybe it'll bring some stability to what they're doing. It's not nearly going to be the overhyped, you know, IPO that Facebook was when they go out. It's going to be hopefully much calmer waters.
You know the food business quite well, Paul. So what is your take about these two companies, Mondelez and Kraft, as they go their separate ways?
Well, what it's going to be mostly about is focus for both companies. I mean, you have the snacks business, which has very different characteristics than what will be left in the packaged foods business. It's fast growing, it's a lot more international, it's a lot more impulsive purchases, whereas the remainder of the Kraft foods business is going to be center store items. It's going to be mac and cheese, it's going to be cream cheese, it's going to be these stuff that are sort of the center of the aisle, sort of staple stuff.
So not impulsive, but considered.
Yes,
well thought out purchases.
Staple stuff that you pick up every time.
You know, one interesting thing we've seen in the stock market this year is Annie's Organics, famous for their macaroni and cheese, the single hottest IPO of 2012.
Right.
How do you put that into context with what Kraft is doing?
Well, let's see. I wouldn't put it too much into context with what Kraft is doing in terms of split up. But
but in terms of products, I mean.
Yeah, what Annie's is doing is they're riding the wave of natural and organic, and they're selling more organic mac and cheese. They've also expanded into snacks, you know, crackers, fruit snacks, and now they're getting frozen pizza. So as more people, you know, as organic grows, they're really riding that wave. And they're doing what the big packaged food companies aren't doing. They're getting volume growth.
Right.
And as everybody in the all investors wonder where the volume's going for these food companies, you know, you kind of wonder, you know, how much of it is going to these small companies that are growing very quickly.
And how well is Kraft adapting to consumer tastes for organic food?
I think it's a very small part of their portfolio. To be honest, I don't know exactly how much, but you know, if you look at their portfolio, it's definitely a minority as far as what they do.
All right, well, maybe they'll have to change that way. Perhaps it won't be about billboards, but about the products. Yeah.